Hi, this is Paul Wilcox with Sterling Rhino Capital. I'm super excited that you decided to download our Passive Investor Retirement Calculator. We built this calculator so you could see the power of investing in multifamily real estate syndications over time, 10, 20, or even 30 years. I'd always imagined that if you treated your multifamily investment portfolio like a retirement account, by reinvesting your cash flow and your profits and your return principal back into buying more real estate, that you would witness massive wealth creation. We preach this to investors all the time, but I wanted to see how that actually played out using real numbers. Well, now we have a tool that shows you what's possible. We have to make some assumptions, and obviously this is not going to be completely accurate, but it'll give you a good idea of what is possible compared to the traditional route of stocks, bonds, and mutual funds. Let's dive into a short tutorial.
Okay, so here we go. The first thing you need to know is that this is a Microsoft Excel based calculator. You will need Excel on your computer to run this. And here I'm looking at the email you should receive from Sterling Rhino Capital with a button to download your free calculator. So I'm going to click that button. And I will be offered here a download from Dropbox. You need to download this from Dropbox onto your local hard drive. So it's downloaded. When you open your file, it will tell you that this workbook contains macros. You need to enable macros. This is a safe file. If you do not hit enable macros, the calculator will not work. So enable macros, and here is your calculator. On the left-hand side, you'll see the commercial multifamily syndication section, and on the right-hand side, the traditional retirement account section. We are going to compare the two investments over a period of time. Anywhere where you see a red triangle in the upper right-hand corner of the cell, that means that cell has a helpful hint or tip for what value to put in there or what that value means. Also, any cell that has red font means that you can adjust the value yourself. Anything with black font, you will not be able to change. It is set as a default. The first thing you're going to need to input is your investing duration period. You can pick anything from 1 to 39 years to look at. This is something you're going to change often as you test different durations, because the whole idea here is to see at what point will you have enough income to retire. So to get started here, I'm going to set this at 15 years. These next three line items, we have set the values for you. As you can see, they're in black font. Average cash on cash return, we're setting to 8%. Projected equity multiple at 2 times, and average hold period of the property at 5. We consider these goals for all of our deals and kind of an industry standard. We shoot for at least an 8% cash on cash return on all of our deals, and an equity multiple of 2 in 5 years, which means in 5 years you will double your money. You can use pre-tax dollars in a self-directed retirement account to invest in multifamily syndications. These types of accounts include solo 401ks, self-directed IRAs, or QRPs. If you are self-employed to some capacity, you can use one of these retirement accounts to invest with us. If you want to learn more about this, please email Chris Roberts or myself, and we will guide you. For this example, I'm going to change this to no. We will be using dollars that have already been taxed from, for example, our W-2 job. The next thing you have to determine is what will be your initial investment total. When some people learn about multifamily syndications, they often have a large sum of money from, for example, a retirement account or a savings account, or in stocks that they want to move over. And it's a large initial amount. However, the following years, they won't be contributing that amount of money moving forward. So you have the option to pick an initial investment total. For this example, we're going to put in $100,000. Then you have the option to choose an annual contribution amount after the first year, because the idea here is to treat this like a retirement account. If you had a IRA or 401k or a QRP, you would be contributing money every year into that account, and we encourage you to do the same here. So I'm going to put in $25,000 per year for the next 15 years.
Here we come to the minimum investment amount per deal. Every deal has a minimum investment entry point. We have this set to $50,000, which is pretty typical. You will find some deals that are more than this, some that are less, but 50,000 is usually the number, and we have that set as a default. Okay, in these next three cells, we give you the option to select how much of your profits and principal you would like to reinvest into more deals in the future. If you decide that you want to live off some of your cash flow and use it to make a mortgage payment or use it to live off of, you could easily change this to 50% or even zero. Same goes with your profits from a sale and your returned principal on a sale. We highly encourage you keep all three of these at 100%, because we want to treat this like a retirement account. And in a traditional retirement account, you're not taking any of the money out over time. All of it goes back in, the dividend payments, they all go back into buying more shares, and that's how you realize the full power of compounding interest. So we're going to leave all these at 100%. We've built in some adjustable tax rates here to keep the numbers more realistic. This first one only applies if you are using money in a self-directed retirement account. These last two will only apply if you are not using a retirement account. Feel free to keep these where they are. However, they will be slightly different for everyone. But this just throws in some taxes which keep the numbers more realistic. Okay, let's look at the traditional account side. The numbers here will mostly match the numbers on the left-hand side, so we have an apples-to-apples comparison. Investing duration period matches. You do have the ability to change the compound annual growth rate. I have it set at 7%. You could change this to 6 or 8 or whatever you think you can get in a traditional retirement account using mutual funds, ETFs, stocks, bonds, etc. You also have the option to choose whether it's a pre-tax or post-tax dollar retirement account. I'll set that to post-tax, meaning we're using money that's already been taxed, such as a Roth retirement account. And the dividend yield I have set at 2.42, which is just an average of the top 5 dividend funds. You can adjust that as you see fit. All right, so let's get ready to calculate. If you see this red hit calculate again, that means you have to keep hitting this button until it calculates your numbers. So we hit that a couple times. We got the green OK. This is key. If it doesn't say OK in green, your numbers are not ready to look at. So we scroll down. We get a comparison here of the two sides. including some charts at the bottom. We start with your out-of-pocket investment, some of your net worth here. As you can see, your net worth in year 16 using multifamily syndications is at 1.5 million, and we're at 985,000 in the traditional. But the big thing here to look at is the potential income. In year 16, using the multifamily syndication model, your monthly passive income amount will be exceeding $8,000 a month or $100,000 a year. And the dividend amount on the traditional side will be pumping out just under $2,000. So this income is what's significant and what can help you retire early. So the point here is going to be try some different numbers and decide how much money you need to live on to retire, or at least to take it easy, or start doing something you love. It doesn't have to be retirement. But what would it take to cover your expenses? What kind of income would it take to cover your expenses? The net worth is great, but the cash flow and the income is what we're all looking for, because that comes in regardless of whether we work or not. So if you say that, you know what, I only need $5,000 a month to cover my costs, and then I can do what I want, well, let's start to make some adjustments here. Well, let's see what happens in 10 years. And we calculate, and that won't do it. So we could change the years, we can change the investment amount, and we can start to tweak numbers here to find out what works for you. But I will say that because the power of compounding interest, the further out you go, the more amazing these numbers get. So play with this. If you want to learn more, you can click on these links here and join the Sterling Rhino Capital Investor Club, and we will start to feed you more information, educate you on how this all works. We'll show you how easy it is to invest and how this is truly passive income. We encourage you to do that, and we hope you're as excited about these numbers as we are. So have fun. We'll talk to you soon.